Whoever you want to pair it against, be it the yen or the US dollar. Implications, are there many implications for our market?
Well, I think if the Aussie does move above $1.06, it may well struggle to hold those higher levels. It may well fall back next week below the $1.06. I think the implications have been widely noticed on the market already. The Aussie dollar's been persistently high for a longer period of time now. We know that the RBA is concerned about it. We know that some of the sectors in the economy are struggling with it. And I think a lot of people are thinking that the Aussie dollar is a bit overvalued at these levels. But as it stands at the moment, it probably is going to stay persistently high. We might see a little bit of a pullback towards parity over 2013. But certainly there's sectors in the economy that the RBA, the Reserve Bank, are looking to start picking up some of the slack through 2013, and a lot of these sectors are dependent on the Aussie dollar. The Reserve Bank has said that they're looking for the retailers, manufacturing, construction to start picking up, or they're hoping to start picking up through 2013. And these sectors in the economy are some of the most sensitive to the high Australian dollar, and this has been a big reason why a lot of these sectors have underperformed. In a general market sense, of course, a high Aussie dollar is not great for the equity market in general, but I think the Aussie dollar looks set to be persistently high for some time.
At this level, does it keep foreign investors out of our market, Tim, particularly if they have a view that it's not going to go higher than this, but in fact it might be overvalued and drop somewhat?
Well, that's right. You need to consider the returns that they're going to receive from the equity market, and then also when they take into account the movements in currency. So, as you said, if they are expecting that the Aussie dollar can't continue its kind of rise, then it might shy international investors away from the Aussie market. Though I suppose when you look in a broader sense, in terms of the global economy at this stage, investors are going to be looking to put their money in markets that are going to grow, markets that are fairly stable. And if you look at the Australian economy in general, it does seem to be a fairly stable economy in a relative sense, comparing to other big and developed economies around the world. So I think the Aussie share market will still remain fairly attractive for international investors. Yeah, I like Woodside. I mean, as Peter mentioned, a year ago there was concerns about cost blowouts and stuff, but if you just look at the past quarterly results, production results coming out from Woodside, they're one of their biggest projects, the Pluto NLNG. It's come online faster than expected. It's producing quicker than expected, and Woodside Petroleum share price has basically just traded sideways for the past 18 months, really has gone nowhere at all, and it's lagged the oil price. I was mentioning just before that if you look back at the movements in oil price for the past 2 months, up about 11% from early November, Woodside share price up about 4% over that same period. So even though oil prices have continued to rise overnight today, you would expect Woodside and the energy sector to continue, to receive some benefits and rise on that today, but it wouldn't really surprise me if we didn't see any spectacular gains across the energy market, as that's what we've been seeing. But I think moving forward, Woodside Petroleum on the longer run looks like an attractive buy.
Some of those energy plays, Woodside down 0.25%, Santos down 0.25%, Beach though up over 1%, and also up about 0.4%. Tim, Transurban in focus today.
It is. It's released its quarterly traffic and toll for the December quarter, and this stock continues to perform quite well. I mean, it's a very defensive stock when you look at what its assets are. I mean, it owns the Melbourne City Link and the M2 here in Sydney, and as well as stakes in the M5 and the M7. But if we look at the toll revenues for this company for the quarter, they're up around 5.1%, so a steady gain on the previous corresponding period. What has been slowing down their revenues a bit has been some major upgrades to some of their roads, most notably the M2 here in Sydney. There has been some delays in terms of that upgrade. That's expected to finish around mid-2013 now, which was a bit longer than what was first initially planned from the company. So that has impacted its traffic and revenue numbers there. But in terms of this company as a whole, I mean, it does have quite solid earnings. Earnings remain quite certain. It's got defensive cash flows, certainly has further upside there, and of course dividends. Investors have been very keen on dividends over the past year. It's got a nice dividend, pays up or close to 6% yield on that particular stock, and it does have the stability in earnings to continue paying an attractive dividend into the future. So I think the keys moving forward for Transurban will be the state of the domestic economy. Unsurprisingly, employment's quite key in terms of traffic volumes, employment levels within Australia in terms of traffic volumes across their toll roads, and also weather conditions in terms of the continuation of the upgrades they're seeing across their roads.
little bit flat. I'm hearing people suggest we could see a strong day off the back of commodity prices in Wall Street, but others saying we might see some gains trimmed.
Yeah, well, we saw a big jump yesterday in response to the Chinese data, and that's what came down to the moves in commodity markets overnight. So we already did react to that yesterday with a bit of a turnaround in the market. So a bit of a flat start. Was expecting a modestly higher open this morning. I think really we'll be looking at some of the material stocks today. I think gold in particular will be interesting. The gold price has bounced back a little bit. I'd expect to see some of those gold producers start to bounce back a little bit. In particular, Newcrest Mining has been beaten down significantly over the past little while. I'll be looking at the financials as well today. They performed quite strongly in the US overnight, so some of that positive sentiment might flow through to our market today and see some of our big banks receive a little bit of investor favour. But I think the market today probably will just look to wait until next week when we do see about 40 S&P 500 companies start to release earnings. There were no significant earnings results coming from the US last night, so I'd say a pretty quiet day on the market today.
All right, Tim.